Welcome back to the Port St. Lucie YouTube channel. My name is Jaime Uribe, mortgage broker of Port St. Lucie Mortgage Brokers here in Port St. Lucie, of course. And I'm joined by the awesome Mindy Hackett with Berkshire Hathaway here in St. Lucie West. Good morning, Mindy.
Hello, how are you today?
Good. I am super stoked and excited that I get to see you and the audience gets to see you as we have this conversation. And I know they won't be watching it much for the information, but I know that just that you're on, it's going to get a lot of views. So I appreciate you.
Absolutely.
So we have a lot to cover. I actually had to write my own little list because I will forget it. But before we dive in, I did want to give you an opportunity to talk about anything local. I know that just a couple of weeks ago, we talked about the St. Lucie County market update for September, wasn't it?
Mm-hmm.
So hopefully we'll be getting the October one here shortly. But since then, sometimes things come up in the market that we might want to touch on. So just give you an opportunity to kind of jump in and share with the audience about that.
For sure. Well, the market updates usually come out on the 22nd, which I think falls right around Thanksgiving. So probably early December, we can go over those numbers. Because
Okay.
I know I plan on checking out that week.
And I will say, I know that the holidays are officially on. Okay, they're officially starting. I'll tell you why. Every year, I wait for this. This is a card from my State Farm guy. He has not missed a card for like 20 something years. I wish I was that dedicated to anything. This is amazing. So I went to my mailbox this morning just a little while ago, and this came over. So now I know the holidays have officially begun. So
wow, that's really consistency.
Yeah. Yeah. So, and it's handwritten by a computer somewhere. But it looks like handwritten. But yeah, so it's kind of a joke in the house. My wife and I were like, all right, the holidays are on. We got the card. So.
Well, one of my friends sent me an invitation to Cirque du Soleil's Christmas show down in West Palm.
Oh, nice.
And I thought it said December 22nd, but apparently it's November 22nd.
Okay.
So it seems like some of that stuff is starting early this year. I don't know.
It is. It is. I see the lights coming up a little early. Yeah. I don't know why, but
yeah. Well, anyway, as to the local market, it's picked up a little bit over the last week or two. It's been a strange transition because we had so many years of go, go, go and such small amount of inventory.
Mm-hmm.
As we return to a more, quote, normal market, it feels weird because of the speed that we had been at for the last few years. And so I don't know why it's taking a long time for a lot of us to adjust back to this, but a 5-month supply of inventory is normal. Yeah. So we're in a normal, quote, balanced market right now. Some neighborhoods have more inventory than others still, but
which is normal
yeah.
in any market.
Now, whether or not I have seen a lot of, for example, in Verano, they've had over a year of inventory for quite a while now, maybe over a year, if I remember right. And now they have 9 months, but there were also a lot of canceled and expireds and withdrawns over the last 12 months. So are those people pulling it off and waiting to put it back on in January? Or are they just, you know what, we'll rent it for now, or different plans until things, settle. So we'll see what happens with some of that inventory. But in general, things on paper are normal, although they feel slow to a lot of us.
Yeah. Yeah. I've used the analogy, driving 100 miles per hour, then you slow down to 75 and you feel like you're now driving slow, but you're still at 75. It's pretty good speed. So
yeah.
On the lending side, I will say, the rates are in that 6% range, which historically have been normal. Like that's,
right.
When I got into the industry, that's where we wanted to be, in that 6% range, maybe high 5s, low 6.
6 definitely feels a lot better than 7.
Yeah. Yeah. Yep. and we kind of touched close to 8, if I remember, at the peak. So it's come down. I think the Fed lowering the 0.25% last month. Was it last month? What month? Yeah, last month. I think that ignited a lot of excitement to the market. And I think even though the rates are technically higher a little bit, since then, I think people are thinking, hey, this is the time. The market's getting better. So it makes sense.
I do think that a lot of inventory is going to burn off locally starting in January through March, April. So this is a very good time of year to get a good deal.
Yeah. And generally speaking, even at the best of markets and the worst of markets, this time, it's home buying season. That late winter, early spring leads us into the summer. I think that's always the best time. And especially us being in Florida, we see it, because of the people that come from up north. They're here,
Right.
they're spending who knows how much money renting somewhere, and they're like, man, it's cheaper to buy it.
Yep.
So we definitely see it, and that's a welcome, that we get that. So
So this is because it's a little slower from Thanksgiving to Christmas. It's one of those sweet spots in the year where sellers may be a little more willing to work with buyers on negotiating and terms and things like that. So
yeah, I agree. So I know we talked a little bit about hometown heroes before we came on.
hold on, I'm getting a call. Let me. Okay, never mind.
We couldn't tell. What was I saying? Hometown heroes, yes. So I know we touched on it before we came on live here. So as of the time of this recording, which is November 13th, there's $21 million available. And I think you had received some information. And what was the time frame that they expect this to last through?
Mid-January.
Okay,
So
which makes sense.
It said, the email said, based on projections, they thought that they should have funds available until mid-January.
Okay. So if you're out there looking, this is a good time to start that process to give you enough time to find the home and actually close while there's still money available.
And I believe there's a required course attached to that. So,
yeah.
I don't know how many hours it takes. Probably not that many, but
no, it's simple. It's generally a simple process, or the same kind of process that you would for a regular FHA or conventional loan. There's a couple little things there, but there's also a checklist. I believe you received a checklist, and I know that you sent it over to me. So what I'm going to do, guys, is I'm going to put the link to that checklist at the bottom notes. And basically what it is, it's a borrower's occupation eligibility checklist. And I'm looking at it up here. And it basically, you could kind of go down the list to see if you would qualify or your buyers would qualify for the program. So it's probably the best little checklist, because it definitely got more confusing going into this year's program, because for the last couple of years, as long as you worked for a Florida-based company full time, basically you qualified. But now they brought it back to what its, I guess, core purpose is to help those hometown heroes. So
yeah.
So $21 million.
We were very thankful for.
Absolutely. Yes. Actually, yesterday was Veterans Day. So thanks to all the veterans that have, sacrificed their life, of course, and served and protected our freedom. So,
amen.
Yep. So anything else on local market before we kind of run down? I'll let you finish and then I'll kind of go down the list here.
No, that's about it. Just, same old for the last year,
It's one of these kind of things.
Yeah. I'm very curious, though, to see what the November numbers show year over year, just because of the whole last year was an election year thing. And So I'm curious to see them when they come out in 9 days here.
Yeah. And again, the numbers are, I think, regardless of whatever comes out, I think they're skewed because of those.
Yeah.
You know, I'm sure after the election, there was a big jump in activity right at that, if I remember correctly, right after President Trump was elected, you know, people jumped back into the market. So this year's numbers may actually be a little bit less, but it's because everybody jumped in the pool at the exact same time, where everybody was away from the pool basically during this time last year. Does that make
Yeah.
sense? So we might
Yeah.
see, they're just going to be skewed, I think, good or bad.
We'll see.
Yep, we'll see. So a lot to cover. We're going to talk about the 50-year mortgage, Fannie Mae's no credit score requirement of 620, which is a really, really big news, which will kind of lead into AI stuff, and then we'll kind of wrap up. So do you think we're going to keep it at a timely manner, or is it just going to be a runoff like our conversations?
A little bit of both. I've got a 2:15 conference call though, so
Okay. All right. So
so we'll have to be a little tighter than usual.
okay. All right, so let's get started. So the 50-year mortgage. So before we jump into it, it started with a tweet. I don't know if it was an exact tweet or it was through the Truth platform. President Trump posted something stating that he wanted to look into the 50-year mortgage, and then Pulte retweeted or shared that, stating that Fannie Mae or the government was really looking to do that. So that kind of, the industry went crazy, and you got the good and the bad, and just everywhere thoughts. So that's kind of the start. What are your thoughts when you heard that?
Well, I decided to remove Facebook from my phone. So I saw it. So I just only use it on my PC for like 10 minutes at work, it not even every day. So, but I happened to see it or a reposting of it. And the first thing I did was I got out my mortgage calculator and I ran the numbers and I said, wow, that's really dumb. And but I can understand the sentiment is trying to find more affordable solutions to bring more people back into the real estate market because the Fed rates are sort of stifling the president's plans, and the reductions have come along a lot more slowly than I think he wanted. And so I think he was trying to come up with other ideas that could stimulate the housing market, because as you and I discussed, housing market isn't just houses. A lot of people get paid every time a house is sold, right? So, mortgage brokers,
Share a couple of those.
lenders,
I know we talked about it, but
yeah, title companies, whatever. So,
Home Depot,
home
inspectors,
inspectors,
appraisers, title. Yeah, so there's a
local
whole.
handyman, insurance agent. A lot of people get paid when someone sells a house, and then, it continues into the economy for a long time as they slowly make improvements and whatever. So, obviously, stimulating the housing market stimulates a lot of other things as well. So, I can understand the sentiment behind it, but when I did the math, I said, "Wow, this is really dumb." Um, so I got the first thing I did was, and you know what? I learned a lesson because after our conversation, you were like, "Oh, it's not happening. It's just an idea." But I thought, just in the context in which I
You
read
thought it
it,
was
that it was,
done. You're offering
yeah.
already.
Yeah, so I got out my mortgage calculator and I ran the numbers on my phone, and I was like, "Oh, it only saves you on a $300,000 loan, it's like it saves you $200 a month, and then the interest over the life of the loan is double." And then you were like, "Yeah, but the interest rate's also higher." So
A lot of
instead of the
people that
200.
Yeah,
Huh?
when I went into Facebook, I posted and I got a large, posting and from all angles. And look, they were all right, because when you think, hey, 30-year mortgage, I'm going to extend this thing to 50 years, it is common sense that there's a big reduction in payment. That's a long extension. Unfortunately, in the mortgage world, it's not, and it really doesn't benefit that the squeeze that we're having. It doesn't help the issue, which is the affordability. I mean, I think I did it maybe 0.5% higher on a 50-year loan, and I think you said 200, basically on the same rate. It's more like 160 or 150 or something like that.
So when I initially saw it, my instinct on the numbers was, wow, people can say, my guess was, wow, this is going to save people like 30-40% on their principal and interest. 20 years is a long time. It's almost double, right? And then I did the math and it was, no, it's very insignificant. However, when you and I spoke, and there are some instances in which I think it could help some people if they are diligent and responsible enough. And that's if we get into a scenario where the numbers are really tight and we can't quite make it. And, well, we could do it with this product, but you've got to set up an auto payment for an extra 160 a month, or you're going to lose a lot of money.
Yeah.
But in general, nice idea doesn't really work. And I don't think it's going to help a lot of people. But, hey, it might be a great marketing opportunity. You, hey,
Hey,
we
come
do
get this
30,
program. It's
40, and
great.
50-year mortgages. And then when you go over the numbers, they can decide for themselves that
Yeah.
it's dumb.
Yeah. Exactly. You took the words out of my mouth. I don't have to tell you it's dumb. You're gonna decide by
And
yourself.
I mean, no disrespect to the president either, just for the record.
No, look,
I
it is, as a lender, I want every possible opportunity to do a loan, even the dumb ones. It doesn't mean that you're going to do it. And our job, we're not financial advisors, number one, but our job is to guide our clients to be in a financially, it's our financial responsibility to do that, to help the clients pick something that helps them. Somebody will get a 50-year mortgage and it will work for them, but it's just overall, it's not beneficial to them. So,
well, and there are some dumb things that can work temporarily as a Band-Aid to, get some people into homes, as long as there's a plan.
yeah.
Hey, we're going to do this, but we're going to pay extra every month, or else this isn't a good idea because it's going to take such a long time to even accrue any equity in the home that it doesn't make sense.
So
But
I'll give you, so in thinking this, and I actually didn't think about this until this moment. If let's assume we go back to during the pandemic when the rates went down to 2.9% or whatever it was on a 30 mortgage, I think that was kind of the low end of that. If that 50-year mortgage was available then, that would have been the ideal fund type of program to get into, because there's never an opportunity to be able to lock in a loan that long at that low of a rate.
right.
It's just beneficial to do it at that point. So maybe there's other opportunities that I haven't thought about, but generally speaking, for the average person, especially a first-time home buyer, someone that may look at selling the property in the next 5 years, it might not be the best choice, because they're not going to build, unless the market goes up by itself, they're not going to build a lot of equity with that
Would
minimum.
that product be something that's available to investors?
So,
Or is it just for
yes.
primary? Because that might be a good use of that. You want to keep your payment a little lower because you're only going to own the home for
So
90 days or
let me
120 days.
let me remind the audience, this is only a tweet, so there's no
True.
guideline yet. We don't know what.
Maybe we're spending a little too much time on this because it hasn't been passed.
I'll tell you, it's all. I know you're off social media, and how'd you do it? I don't know, because I'm all in it now, because posting and this and that. But it is everywhere. Everyone's talking about it. I've had people post on my post saying that it is amazing. They can't wait. They're gonna get a 50-year mortgage. I'm like, dude, you're gonna save like $100.
Well, because when you think about it and you don't do the math, it really sounds like, oh my gosh, I'm going to be paying like $400 or
Not
$600 a
everyone.
month less.
Not
Yeah.
everyone has one of these puppies on their desk. Okay.
I don't even know how to use that. I just have a mortgage calculator on my phone.
It is a mortgage
Um,
calculator, but
that
just a real big one.
I don't even think it's like supported anymore, but it works. So
Yeah.
anyway, it sounds like such a good idea. Like if it sounds like, oh wow, payments are going to be like 40% less on principal and interest. That's great. But then really it's when you do the math, it just doesn't work out. But that's okay.
Yep.
Maybe it would be a good product for certain other situations, you
Hey, you
know.
know what? The good thing, I'll tell you what the good thing is that they're thinking outside the box.
Yeah. They
Now,
want to,
what
I
comes
mean, it's
out of
clear
it,
that they want to get the market moving,
whatever
which,
comes out of it, we'll see. But hey, at least somebody's thinking outside the box because something's got to be done. It's not, regardless if the rates came down a little bit, regardless if prices have um,
mm,
how do you call it, stabilized.
mm,
Um, affordability is a huge issue, and people got to sell. People got to sell, and people got to
yeah,
buy.
for
So,
sure.
all right.
So
So,
that brings us to another idea,
tell
right?
me.
The removal of credit scores.
Yes, yes. Thank you. So Fannie Mae announced this week, or maybe last week, but this week, I think, that they are removing the minimum credit score of 620 for Fannie Mae loans. And we could assume in the near future, Freddie Mac, which is its kind of counterpart in the conventional conforming space, both kind of managed by the government, to follow this suit. So really exciting news, very confusing. I think, again, similar to the 50-year mortgage conversation, I think a lot of conversation around the Fannie Mae credit score has been not thought through, and
Mm,
without the knowledge of why. And again, they didn't, it would have been easier if they would have come out and said why, like, hey, we're removing it because this should increase sales or loan size, or not loan size, but um, loan transactions, let's say, by 10% or 20%. Or maybe if they gave the audience guidance, we would know why they did it and what
right.
they're looking for out of it. But they basically said, hey, we're removing the credit score, and everybody's like, oh, it's because of this or it's because of that, and this is what's going to happen or that's going to happen. So in saying that, tell me your thoughts.
Well, when we were talking about this the other day, I brought up overlays. So obviously banks are going to have overlays. And an overlay is a requirement that gets put on top of the government minimum standards. So you could probably just explain this better than me, but when you're getting a conventional loan or any government-backed loan, right?
Any loan, yeah, any loan that's by
There's federal minimums on loans for requirements, and one of them was previously, which was a 580 credit score. However, the large majority of banks put a 620 overlay on that.
and
So
that's for, to clarify, that is for FHA.
yes, yes, yes.
For FHA specifically, the 580 credit score is the minimum that they require. And sorry to jump in, but that overlay of 620 is seen by banks banks are the ones that are putting that overlay because of
Yeah,
regulation
it's an
that they have.
additional restriction specific to the bank that they choose to add on to whatever the federal minimums are.
Correct.
So, um, so there will be overlays. So we don't know how many banks are going to actually adopt this. I'm sure at least one will. And I'm sure probably one of your lenders will, and you'll probably have it available because I know you have a lot of different lenders you work with, which is
Yep.
why people would come to a mortgage broker such as yourself, because you can tailor a very specific um, opportunity for anyone. Um, whether or not you want to reduce your closing costs and you don't mind having a higher rate or vice versa, um, you know, you are in a position to find exactly what suits people, which is why I always recommend you.
Thank you.
So, So we'll see what happens with that. But again, it looks to me like it's an attempt to loosen up the market a little bit. I know there's definitely plenty of good people who are stuck renting because, they may not have the best credit score. And, I'm sure there's going to be probably some correlation as to the reason for the credit score. They're still going to pull credit, right? It's not like they're not going to pull credit.
Yeah, it's just not gonna. There's not that cutoff.
Right.
The system. So what they're gonna do, they remove that so anything that came in below 620 was an automatic denial by Fannie Mae's model DU desktop on the right.
You mean 580, right?
No.
Oh.
Conventional is a 620.
Okay.
So FHA is a 580. So on anything less than 620 would automatically get cut off. Now what the model is doing is not looking at that 620. Now, is it taking it into consideration? Maybe. They haven't said if it is or it isn't. But what it is doing is that it's looking at other factors on the borrowers, on the applicant.
So do you think that they'll be scrutinizing other things with more intent?
So I think
such as the reason for the low credit score.
Yeah, I think the general reason they did this. So there's a couple things, and we touched on this when we spoke. So, and I won't go down. We'll try it. And if I go down a rabbit hole, just pull me out. Okay, just say
You got it.
Deep.
That's what friends are for.
Yeah. But I personally believe, and again, they didn't give us guidance, so everybody has their opinion, right? If you look on Facebook, whenever you do get back on Facebook and you look at these posts, people are saying that this was set up so that way the market crashes and we're back to 2007 and 8 guidelines. Just, basically everybody gets a loan, which will then lead to the big, great collapse. There's posts out there like that. Trust me. But, and then there's other posts that are on the complete opposite of that, stating, hey, this is what the market needs, and that's going to help people buy a home, and they're still going to look at other stuff, but more reasonable, but more on this will create and give more opportunity. So there's a couple things. So I'll touch on the credit report. So over the last few years, specifically since the pandemic, credit report costs have skyrocketed. Not too long ago, credit reports cost $10, $12, $15. And now they're close to $100 per person. And it, over the last few years specifically, it has gotten the government's attention, like, hey, maybe we use a different model. So there are new models that are coming along that will not rely on Equifax, Experian, and TransUnion. Yeah, TransUnion's credit reports, because of those costs. And if you don't know, most people think that those 3 agencies are like part of the government. No, these are real corporations trying to make as much money as possible. And if they could charge $200 to $300 per credit report, they will do it. And they're legally able to. This is not.
Well, even if you have a membership, let's say, to one of their sites, right? When you log on there, like, they email all the because you can join some of them for free, actually, and not have a paid membership, right? I forget which one, whatever. And they frequently will email you, since they have all of your credit information, car refinance offers, home refinance offers, personal loan. Oh, your credit card debt's, getting a little high. Do you want to refi into this? So it's definitely a big advertising opportunity for them.
Yep. Most people don't know, but you've probably experienced this, is if you've had your credit run by a mortgage company for the next 24 to a week or two, you will start getting solicited by everyone, every lender out there. What you don't know, or what most people don't know, is that those same credit reporting companies, Equifax,
Are selling
TransUnion,
your information.
they get that information and they have contracts with lenders. And so I'll give you an example. Bank of America, and I don't know if they have it. I'm just saying a local bank, whatever. They might have a contract with Experian, and Bank of America might say, hey, whenever you guys get a client that applied for a mortgage, I want you to send it over to me. And then they get the bank officer there, the loan officer there, to call that client, and that's a call. And then you multiply that times hundreds of calls, hundreds of lenders receiving that information. Now you're getting hundreds of calls, and it's very it's a nuisance. The good news is that there was a bill that passed and signed into law earlier this year, just a few months ago, that they are no longer able to do that. So going back to my earlier point is that those credit reporting companies have gotten the attention, unfortunately, the bad attention that they didn't probably want from the government. So they're getting cut in different ways. I think this is one of those ways that they're getting cut off from having these lenders, be required to use those agencies, if that makes sense.
Right.
So I think that's one of the reasons. The second reason is I don't think they would do this if it lowered, especially in a time like this, if it lowered the possibility of somebody qualifying. I can't imagine that being, if that was in the calculation, they wouldn't have passed this.
Right.
So I think it's going to help. But at the end of the day, these agencies, both Fannie Mae and I'm assuming Freddie Mac is going to follow soon, they're still going to have a criteria. They're still going to have a criteria, and they're going to say, hey, the client needs to have X amount of money and X amount of reserves and a credit that can't be maybe recently delinquent on bills or late mortgage on a recent late on a mortgage, or things like that. That they'll still
I'd love to
in the
see
box.
the restrictions when they come out.
The
I'd love to,
algorithm for it.
yeah.
The box.
I'd love to hear what they are.
We most likely never will.
Oh.
That DU or desktop and LP for Freddie Mac have been around for, I'm assuming, decades at this point. And me being in the mortgage industry, we don't know. It gives us a general idea, but it doesn't it doesn't tell you because of this. And I think this is going to be even more vague. Maybe I'm wrong.
Well, we'll see.
Yeah. But it's exciting because we just talked about, actually, if you really go back to our Hometown Heroes thing, these are 3 government incentives to move the market.
Yes.
So now, is that a good thing or a bad thing?
Well, like I said before, real estate creates a lot of opportunity for a lot of people, and it moves a lot of money in and out of the markets. And as an industry, it's an industry that affects a lot of other industries. So,
isn't it our largest, what's the word? Is it, I don't know, maybe industry, but isn't it our largest industry in the United States, real estate?
I don't know. I know so. That's really dumb that I don't know that.
We should know that, right?
Yeah. I don't know. It could be oil. It could, I don't know. Who knows? But anyway, it to me, it's something that, generally we always want to keep healthy, because when it's unhealthy, other things get unhealthy. However, it's interesting because, and we've talked about this before, because, in recessions, there's only one recession in which real estate prices went down more than 3%, which was the Great Recession, and every other recession, they did not. And that was a different case there. But anyway, obviously it's something that's been identified as something that needs to get moving along a little bit more.
Yep. And there's a lot of eyeballs, obviously, from our government that's trying to do things good. 620 credit,
It's just,
good one. Some not great, but again, give me every opportunity.
I know that you and I try very hard not to get political, but I will say that
Who us?
just because
Oh,
right now it seems like parties are making decisions to spite each other as opposed to what's actually best for us and our economy. Um, so
I agree. There's a
that
lot of
goes both ways. I'm not calling out one over the other, but that goes both ways, and that's kind of gotten to be a little bit silly because we need to learn to work together to have a healthy future, and
yeah.
instead of opposing the other side just to oppose them.
I agree, 100%.
So
So, um, the second reason I think this Fannie Mae announcement's pretty big, and I'm not hearing a lot of this, and you kind of tell me your thoughts. I know we talked about it just a little bit last time, but I think this has to do with AI. Your thoughts?
yes, you mentioned that,
So
and
I go ahead.
well, I haven't always been the biggest fan of AI, and it gives, it can do some pretty cool things, but at the same time, there's a lot of things in your industry and in my industry that um people can do that AI can't do. And one of those things is have a gut feeling, right? Um, you know, putting a human being into an algorithm to determine their eligibility for a mortgage um seems a little dehumanizing to me. I think sometimes I feel like a
We're all
person should make
numbers.
that
We're
decision.
all numbers now. We've
Huh?
been numbers for a little while. I will say that. I mean,
Well, look, aren't there instances in which you can actually call the underwriter or the processor and just say, hey, what can we do to make this work? Or is there another solution? Or um,
right.
this is a really good
Common
candidate. I
sense
don't understand why we're coming
decision.
up. Huh?
Common sense decision making.
Yeah. Like you can actually call them and have a discussion with them. But once everything goes AI, or if it does, I hope it doesn't. Um,
That's gonna be the next thing we're gonna talk about here in a second. We're gonna leave.
great.
So, don't
But if it does go that way, then there's certain things that you're not going to be able to do to
right.
help your clients. And I think that to a certain extent, and maybe there'll be one lender that says, no, use us. We have human underwriters, and that's going to be their
So they'll
thing.
be
And we're all
bankrupt
going to
because they'll be spending too much money on payroll while the other ones don't pay anything.
look, they can make money now. All these companies make money now, plenty of money. What do they need? I wish sometimes that people or companies, large companies would take a look at, yeah, I make billions of dollars a year and all I'm constantly doing is looking at ways to cut costs instead of like, hey, how can I pour back into the community by hiring more people
Yeah.
that would increase my profits,
Yeah.
like instead
So
of instead of focusing on how can we cut people out? Maybe they need to focus on how can we bring more people in to help us make more money instead of how can we cut people out to make more money? Make sense?
100%. Yeah.
Anyway,
So as you're saying that, to think of ways that could be. So I'm not old enough to have done this. I'm my mid-20s. So,
okay,
but there
sure.
was a time where you actually walked into the bank and you said, "Hey, Mr. Banker, the CEO of the bank." You actually had a chance to speak with the CEO of the bank, right, of the local bank, and you would say, "Hey, I got this great idea, and I want to open this ice cream shop, whatever kind of business. And here's what I'm thinking, and I have no money, I have no nothing, and I have, my credit sucks," or whatever the story was at that time. But there was a chance that that decision maker on the other side of the desk would say, you know what, I actually believe in you. I think that's actually a great idea. I think that would actually succeed, and they would lend the money for that business.
Hmm.
That's one of the human things that you would be cutting out with that AI model. You
Oh, and
you
even like,
you would
oh,
never
like that.
have.
This is a human being that's a big part of our community who's known for being really responsible and blah, blah, blah. Yeah, of course.
Yeah, it does.
So,
No AI model could ever take that into consideration.
I think maybe in the future, like, people banks and people companies are going to be a luxury item.
Yeah,
Like, hey, you know,
come visit us. We got people. We got humans here.
or like, hey, for me, I'm very patient with people, but not electronics and not waiting. So for instance, like I am the calm person. I'm a very calm person, except when I'm calling somewhere to solve a problem and I have to talk to a robot in order to talk to a person.
So
That's when the anger comes out. I will pick the cell phone company that maybe you pay $10 a month more for your plan, but when you call, you can talk to a human.
yeah. So I guess we'll just jump right in. Anything on the 620 credit score? I think we kind of talked about that. I think we're on to AI full fledged here. We're
I
on.
really hope that it helps some responsible people get into a home and that, you know, I think it will definitely help people. I think there's some people that, um, it may not help, but, we'll see how it goes. I'm looking
You gave me
forward
a
to
great
it.
example. I'd love for you to share the example you told me on the phone of bankruptcy, I think it was, or divorce, something like that you had
Oh,
mentioned.
no, I had, well, no, I had, um, I had a client who, is self-employed that was working very, very hard to, pay off their mortgage. I think we talked about that. Oh, this may not be the same example, but who had worked very, very hard to pay off their mortgage, and then they paid off their mortgage and their credit score dipped a lot when they paid everything off because it's I understand that there's a little algorithm to that where showing using credit every month and paying it off or whatever is, and the length of the credit, which you had mentioned to me, are all things that increase your score. But here's someone who's uber responsible being punished by the credit score system, which I think that's, it put them in a, it's just not um
It's not common
necessarily
sense.
sensical. Is that a word?
That's common
Sensical?
sense. Yeah. No,
Yeah.
I can't tell you how many
Um,
times over my almost 30-year career I've had to deny files because, or clients or borrowers, because they had no credit. They were like responsible people. Yeah, I got $50,000 in the bank, but I pay
and
everything
I
cash.
don't have a car payment because I didn't want one.
Yeah, I'm not stupid. I don't finance anything. I'm very responsible. I only buy things. That's the guy I want to lend money to.
Yeah.
But
Right. And if he can show like, hey, look, no, I paid cash for all these things and whatever. So yeah,
yeah,
it's not necessarily the best system. So I think for people who do have um a shown history of responsibility, but without using a lot of credit, I think it can benefit some very good people who deserve, you know.
yeah. I think the example you had given me, if I remember correctly, was maybe someone that either had, I think, bankruptcy or gone through a divorce, and maybe usually on a divorce, the person might be on the other person's credit card or something like that, and of course,
And then
whenever
spitefully they stop paying
thankfully they
and
stop paying for it, and of course that brings this credit score down. So and they might, on their bills, they might be perfect, but because of that one big bill or car payment, they're shot, right? So hopefully those are the kind of things that this 620, the elimination of the 620 minimum credit score will help
Yeah.
those those
Well, I
borrowers
think people
move
should
forward.
have the opportunity to build a case for themselves. And look, there are some people who on paper you might want to say, yeah, you know what, it's a little too early. Let's give it a couple years to show a little more responsibility, right? I mean, this is the biggest financial responsibility you're going to take on in your life is a mortgage, right?
Yep.
That and saving money for retirement. So, not necessarily everyone is ready for that. But there are some people who definitely get overlooked that shouldn't be.
Yep. I agree. So we talked about AI, and you put this question to me a couple days ago when we spoke about it. You said, "Are we going to be replaced?" And I was like, "Well," so I won't tell you what I said, but I'll let you kind of tell me your thoughts on asking the question and what you know you thought of since then. I mean, if what you think,
Well,
specifically our market in AI, or any personal thoughts on AI, generally speaking.
I definitely like people a lot more than robots, with a few exceptions. Um, not many. Um,
My wife made an appointment for a local car dealership here locally, of course, to change the oil. And she literally called me. She was like, "You wouldn't believe I had to talk to an AI model to schedule my appointment." And the model was the nicest person. They did not give her she was so happy that they didn't give her any attitude. She was like, if everybody was like this, I would almost rather talk to an AI model. But so there might be, some people.
hey, they might get really, really good, but right now, sometimes there's not prompts for the things that I'm calling for. And then you get in this loop, and then you just want to throw your phone across the room. And if
Yeah.
you're pushing me to that limit, that's bad. I think that my particular business is a person business, and
So
I
people
don't really see how we get replaced. Um, because it's one of those things where, first of all, again, the biggest decision of your life is you know, biggest financial decision of your life is a hard decision to make, and there's a lot of factors that go into it. And, with all my buyers and sellers, no matter what situation arises, I try to provide them with all the pros and cons of every situation. And a lot of those things are things that someone would think about if they weren't in this business and didn't have 19 years of experience selling homes, right?
Right.
Um, so yeah, there might be a way to do it that way, but I feel like um there's room for a lot of mistakes in that scenario.
Yeah, I
Um,
agree.
I mean, just silly things like, well, how how does buying it's not even knowing the right questions to ask, you know what I mean? So,
Right.
like, if you were just somehow, buying a home in some AI universe somehow,
Right.
I don't even
That's a
I
robot.
yeah, not a robot, but just I don't even know how it would be done, but, um, you wouldn't know the right questions to ask.
Right.
Like, "Hey, this house is a 3 houses down from a boulevard. How's that affect the value? Does that make it harder to sell?" Maybe the buyer's not thinking about those things and,
Right.
not realizing that, hey, in
Mhm.
those situations, I'll tell people, "Hey, in a in a in a seller's market, you're not gonna have an issue. You might the value is gonna be affected by approximately X dollars, But you're not going to have too hard of a time selling it in a seller's market. But in a buyer's market, you're going to sit. When people have a lot more options, and you're 2 houses off of the boulevard, that might be a challenging sell. So I always bring that type of stuff to people's attention that they may not be thinking of. And I don't think, AI is going to have those type of capabilities, or as a robot have someone's best interest at heart.
Yeah, I agree. Yeah, it's definitely a people's industry, and your experience can't be put in an AI model. An AI model will know, maybe they'll know that if a house is 2 blocks away from a street, maybe you could teach a model to know that, hey, you're 2 blocks away from a major avenue. That's not good. It'll tell you that. But as a person, you've gone through personal experiences, working with a seller or a buyer, that experience does not show up in any report. It does not show up in any transactional document or anything that's trackable by an AI model. But you as a person could explain, hey, I noticed you got 2 dogs, you got this, whatever it is, you could give them advice because you had the experience of seeing that firsthand somewhere else with a different,
Right.
the client. So, and like I mentioned, I think the first, I think your question was like, hey, are we going to be replaced? And I was like, probably, but me before you, right? Because I'm behind a desk. It is a lot likelier that it would happen. Hopefully it happens way after I'm retired and gone. But, anything that's number driven, trackable, those I think are the easier jobs to get replaced.
Right.
People, again, is my job more people or more numbers? Mine's is more people, believe it or not. But, there are already signs of people using big companies, which I won't mention, that use those models already to get business. Excluding
Before you continue, I just want to interject that one of the reasons that I recommend you as a mortgage broker, you're very good at translating mortgage terms into layman's terms.
Yeah.
And I don't, you can tell, oh, wait, they're not quite understanding me. Let me rephrase this in a different way. And you're very good at doing that and making it a very easy, tangible thing to understand. Whereas I don't feel an AI could do that.
Yeah, an AI model asks a question and they're looking for the yes or no with a response ready for each of those answers. I don't think an AI model, at least where we're at today, will get a yes or no and say, yeah, but that one came with a hesitation. Yes. Let's dig in a little bit. Mrs. Client, you said yes, but I understand that you were a little hesitant. Explain to me, is it because of this or that? So that's the human part, us being able to sense, to feel. We're not looking for a yes or no answer or whatever answer. We're looking at not only the answer, but the feelings or the concerns or the questions behind those answers, so we could better paint a picture or explain those things, whatever it is that we're talking about, to that client. So
Right.
So,
For sure.
yeah, AI is definitely, it's coming on strong, and I think our industry is really going to get affected, not by replacement. I'll be honest with you, and I don't, I said mortgage brokers are more likely, but I don't think that's going to be, honestly, hopefully not in my lifetime. But I think it's definitely impacting our business. I think it's impacting the way that we market ourselves, we promote ourselves, how we handle business, how we schedule. Look, we're doing this video. And before I started recording and doing all this, and I actually had to take it off. It was like this beautiful. It made me look like a 12-year-old glow, and it has all these little models. You could put like lipstick. So before you even jumped on, I was like, literally, I'm like, okay, that's how it looks. I mean, just some crazy nonsense stuff that AI does. and you can move around and it follows. I mean, it's insane. But I think it's going to change the way we do business. It won't replace us, but at least not for the short term. But I'm pretty confident that it either has, is, and will change our industry.
Oh, it'd be great if I could hop on the MLS and say, "Hey, computer, show me homes in this price range." You know, if I could speak just exactly what I need instead of going through all the prompts, that'd be cool. I should probably send an email to them.
To the one to
the MLS provider.
I'll tell you, this weekend I did, and I haven't done this for a while, but now I have a little bit of time. On the weekends, on the weekend, this weekend specifically, I was able to go to open houses and stop at some open houses. And I started by going to Zillow and look for open houses. And I only want to do kind of like in my box, my general area. I don't want to drive across town for this. This is just something convenient that I could introduce myself to local agents. And that search started by me manually doing this. And I said, hold on here. This is not. I went to Gemini, which is the model for Google. And I said, hey, give me a list of all the open houses this Saturday from 10 till 2.
Mm-hmm.
The list came on and I could just check that one. Insane. 2 seconds.
Did you buy a house? I'm kidding.
To buy a house?
No, I know why you were going.
No, not to buy. Definitely not to buy a house. No, to stop by and introduce myself to the real estate agent. But
I know.
But that's literally saved me maybe an hour's work.
Yeah.
And it provided, and I actually said provided check an Excel sheet with the date, the times in I want you to categorize them by date, by times. So that way the earlier one's on the top. The address, price, bedrooms, bathrooms, agents' contact information. And it literally printed it out like in 2 seconds.
Nice.
But with that, you could do a lot of course, many other things. So, anything else on AI? I know you have a meeting, so we're running up to that 2:11.
Yeah. I'm cautiously, I'm not a big fan of AI. I guess maybe, but I have started to use it, and then it's one of those double-edged sword things, and it's because the potential outcomes related to it are so varied. It could be great, it could be really dangerous, or we could end up living like in the movie WALL-E.
Yeah.
Which I think would be absolutely terrible.
I think this is going to run all the way up to the time where it's hard to find people work. When that happens, I think the government will step in and be like, this AI is not great, whoever it is. Who knows how many years from now, but they're going to be like, this is a terrible idea. This is killing jobs.
I mean, I would imagine in a couple of years, it's going to be, I mean, even now it's hard sometimes to tell like what's real and what isn't real,
I'm not real right now. This thing has so many filters. I'm like catfishing out there right now.
I didn't put any filters on. That's not fair.
I didn't. No, I told you I took it off.
I know.
I took it off because it made me look like 12 years old. I'm like, no, I can't look. No one's gonna take me seriously like this.
Anyway.
But yeah, I think it's not a problem. I think it's a toy, honestly. And I think, there's a lot of crazy stuff. Great, crazy stuff, especially when you talk about medical stuff and whatever, like engineering, things that are going to help humanity, I guess, some way. But it's going to be used in bad ways, and probably is already. Some guys out there doing
Oh
some
yeah, for sure.
with it, right? But in the meantime, I guess we'll just make funny videos with him.
I'm just glad that I'm alive now and not in 30 years.
30 years. Well, you will be
No,
in
I'll
here in
still be
30 years.
alive in 30 years. I'm sorry, let's say 50 plus.
So, yeah. But yeah, so it's definitely coming. I think we have to embrace it where we can, where we feel comfortable, and use it responsibly. I mean, just because it could easily be used irresponsibly. All right. So
For sure.
In saying that, before we wrap up, anything you wanted to that we skipped on, or anything you wanted to cover? We've had a good, and we might actually end on time here. Get you to your next phone call. So, local market. I know we talked on the 50 years Fannie Mae AI. A lot of great
I can
stuff.
always think of things to speak about related to real estate. I can probably talk about it for many hours straight, but at the moment, I think we covered a lot, and
we
fun
should
is
end up
fun as always.
So, in wrapping up, I want to thank the audience, obviously, for joining us. I want to thank Mindy for being on camera, and she looks fabulous. And if you think she should come back on camera next time, give the video a like and subscribe, so that way I could convince her to continue doing this, because it's not the same without her here with us. So, but I appreciate you.
Thank you. And actually, my other call's coming in, so it's been
There
fun.
you go. So I appreciate everyone. We'll cut you off here in a second. Sorry. So thank you, Mindy, for joining us, and we'll catch you here shortly, guys.
Thank you.
All right.
Bye-bye.